G'day traders, thanks for joining me with this part 2 analysis video. What we'll do is continue with the second sort of watch list, no particular industry or sector, just a little bit of a mixture, mostly tech by the looks of it, just individual companies, and we'll go through and have a look at any compelling trade setups moving into the week beginning Monday the 31st of March 2014. So we'll start with eBay. Now eBay has potentially, pardon me if I zoom out, broken out of this rectangular sideways moving channel, and we could simply be retesting the old breakout as new support. Now there's two levels that we've been paying attention to, one at 57, the other down here at about $55. So you've got a $2 variance in support. We broke through the first one, as you can see, but now we're hanging out right down at this $55 level support. Now, interesting enough, we've got some candlesticks which are telling us that potentially we've made a bottom. You can see the lower wicks. This indicates buying pressure, and the individual candlestick is what we call a hammer, and it's a very bullish candlestick in the event that we trade down to support and bounce. So what we need to do is bring down a bullish trigger. We can bring this down to about $56 on the bullish side, and that's another really good re-entry, and it's also a re-entry off the 50 on eBay in the event that it decides to bounce and move higher this week and leading into April 2014. This would most likely be one of the buying opportunities of the year anyway for eBay, if in fact this is the beginning of a new trend breakout. So that's a really good entry on eBay. We also have the bearish breakdown here at about $54.11 also. So this could just be, again, that natural oscillation and the continuation of that channel. So we'll soon see what eBay wants to do. We've got Facebook, again, trading into that long-term bullish trend line. So what happens is we trade into it, we bounce. Now, we haven't actually seen the bounce yet, but again, it gives us a really good opportunity to look at buying long in Facebook, even though the chart in and of itself is quite bearish. You can see this incredible sell-off that has taken place in Facebook. It's really sold off about 10% in 5 trading sessions, which is quite amazing for Facebook. It's really been quite a bullish stock after its failed IPO. All those years ago. When was that? Back in 2012. Really since then anyway, this 63.33 is a really good entry, and if we break down below, very similar to eBay, if we break down below that lower wick, let me just delete that and drag this down, really good shorting opportunity down to $53 a share. So definitely keeping an eye on Facebook. GILD, this share was a really good trade last week, 2 days, 74 down to 70, really nice move on option, very nice profitable move. Haven't actually reset the trade up, and it's not something that I'm looking to get in just because of all these old support levels over here on the left. So although it looks compelling to trade bearish, we are incredibly oversold. If I bring up the oscillators, you can see how oversold we are on the stochastics, the RSI, and the MACD. So it's only natural for this to actually bounce and get a little bit of a whipsaw, get stuck between support and resistance here and here before we get the next selling pressure down. So although GILD looks very tempting, I wouldn't be getting too carried away with it. IRM, again, 2 trades which haven't triggered, or orders which haven't triggered, just waiting for them. We've got MasterCard, again, moving quite bearish. You can see those huge engulfing patterns. One here, a second here. This was telling you to get in. We're down at support. Now we're at a very key juncture as to which direction MA is going to move. So I'm going to simply bring this down to about $71.38 and say, if we break below here, we're moving to the second fan line down here, which is going to be about $68 a share. So very interested in MasterCard. MU is also breaking down, really nice, almost down at our ultimate support at $21. So that's another really good share. Tesla has broken down. We were talking about this being a descending triangle and how we were thinking that it was going to break bullish based on the exponential moving averages and how they act as support. Instead, it's failed. It's filled this gap, which is obviously support until it fills. Now we're just testing the 50. So although it looks quite bearish at this picture, we're simply at the 50, and this is another good opportunity for the bullish bounce. I'm still going to leave this trigger here at 250. It's just not compelling enough to get in any earlier. Here's Twitter. Twitter we had at $48.79 down to support here at $45. Again, quick 3-day trade. It was a 3-day trade. Let me just recap that. Out at our support level, now we've got 2 bullish candlesticks. Not interested in Twitter this week. It was a good trade in the past. We need things to reset up. Yahoo, same sort of deal. breaking down below our trigger. We've had two little bullish days. This could be what we call a bear flag and a continuation lower down to $34.66. Zinger, again, nice bearish move below our trigger at $4.65, moving on down to about $4.11. So there's some really nice trades. This is the second part of really a 3 or 4 part sort of update on the market. If you like it, comment, give it a thumbs up, share it. Or just, inform me, ask me questions, look for shares or ask for shares to be analyzed, and I'll do that for you. All the best, everyone. I'll catch you during the for the midweek market update. Goodbye.